Today we're going to talk about the 12 candle rule and the hourly phenomena. You definitely want to watch this. G'day traders, Stacey Burke from Stacey Burke Trading. Thank you for all the fabulous feedback and all the questions. I'm glad that people are getting value out of these videos. I'm trying to show you content that is relative day to day to what is actually going to happen pretty much every single day in the market. It's going to challenge you. It's going to throw curveballs at you just when you think you have figured something out. The market will throw something else at you. And that's the challenge, and that's why we're here, I suppose, because it's a battle of opportunity and the challenge of obviously losing money possibly. So, but one of the things that we've been talking about is the high-low, equity opens, numbers. Now, none of us can debate that. This is duplicatable. It's very simple, it's duplicatable, and it's scalable. And that's what's important. If you really grasp that and just start focusing on some simple concepts, you'll start to see this clearer and clearer and clearer. Today we're going to expand upon the 12 candle principle. Now we've talked about this in other videos, but we're going to get very specific today about how that applies and how the hourly phenomena kicks in with that, and how that does a couple of things. It minimizes my window for trading. It keeps me out of the market and sitting at the screen, getting involved into the market when they possibly are creating a block of orders that they're going to stop hunt later, and we're going to talk about that as well. But today, again, just to rehash, we focus on the high and low of the day. The equity opening times, 3 a.m. London, 9:30 a.m. New York Eastern Standard Time, New York. Now people have been asking me, what time is it? You know, I'm in this country, what time is it here? And I'm like, I don't know. Google it. It's 3 a.m. New York, 9:30 a.m. New York. So just Google that. Whatever that time is for you, that's when the equity market's open. We can argue about that, but that's basically the time. So the high and low we can't dispute. We can't dispute the opening times, and the numbers on the chart we can't argue about. So when people say, oh, you look back at trades and I would have took it there, I would have took it there. I'm talking about real stuff that we can't debate. They're hard facts. And today we're going to explain how the 12 candle principle will apply, and we'll actually narrow that down probably to 4 candles and in some cases 8. But we're going to go through that, and we're going to talk about some things that will hopefully impact your trading even more. Okay, so we talk about the high and the low. Now, when we come to the market during the day, there's a high and a low. Now, if the market is traded all over the place, okay, before it gets here, just redraw your high and your low. If it's got a swing high and a swing low, just redraw the box. So if the market moves 75 pips in the morning and then goes into a sideways 25 pip consolidation, redraw your high and your low. In most cases, this will correlate with some numbers inside or around a number. We'll say for demonstration purposes that this is 50, and we could say that this is 75 up here. Doesn't matter, really doesn't matter at all. Some cases the number may be right in the middle, and we'll call that the median price. But for today, what I want to focus on is the 12 candle rule, because you're going to get tons of variations of that consolidation. Some days they're going to shift at 75 pips, and you're going to think that you've missed a trade, when in reality there's going to be a great trade that comes out of that, because they'll go into a consolidation and probably shift it back the other way. So the next thing that we talk about are the equity opening times. So again, for demonstration purposes, we'll say that this is the end of Asia, and we'll call this 2 a.m. New York. So end of Asia, beginning of Europe. Okay? Now, in most cases, or in a lot of cases, the market will move around and possibly come out of the top of the box, but move down towards the bottom. And it will stop out people who have possibly gone long earlier in the day. In most cases, or in a lot of cases, what I want you to focus on is 1 candle, 2 candle, 3 candles, 4 candles, somewhere by the time it gets down here. Now, that eliminates the first 4 candles. And what that also does is it brings us into the next hour. Now, if you were looking at an hourly chart, this might look like one big bear candle. Now, when London opens, we might get another candle that prints down. We might get another one that prints down. And then we might, well, I'll use a green candle for that. We might get one that prints up again. And again, we're into the next 25 pip box at this point, which would be 25. Okay? And then we may get another one down. So at the end of this hour, we may have a bull candle with a tail. And just for demonstration purposes, we'll draw that as a bull candle. And it's gone outside of that upper 25 pip box into this next hour, which is, we'll call this 5, 6, 7, and 8. Now we've taken care of 2 hours, but on the hourly chart, if you were to look at this, you'd have a big bear candle and a small bear candle with a tail. Now at the beginning of the next hour, we may have another candle that pops up or becomes a bull candle that closes above this small bear candle. And now we're into, well, I'll have to draw this a little further over, but you'll get the idea. Okay, this is number 9. The market could then consolidate again somewhere in here as a bear candle. And then all of a sudden, you might see it pop up even stronger, back inside of this range. So we've got 9, 10, 11, and then 12 could end up being a bigger candle or whatever, it doesn't matter. The point I'm trying to get across to you is we've talked about the stop hunt patterns. So the first hour went up, sorry, in this case the first hour went down. The second hour stayed down low but was a smaller candle. The third hour popped back inside of this box. Now, oops, the hourly phenomena is this. We hit the stops, and they've come back into the box and they trend. Just like we saw on the major pattern that we showed the other day in the video. What's important about understanding this is that when you know that they're going to issue a stop hunt in that changeover session, it could be up, it could be down. They might make it look like it's going up and then it goes down, and vice versa. But in your head, before London opens, so London took traders further down and then popped back up. And then it went down a little bit more before it came back inside of that 25 pip box at numbers, at 50. We talked about the significance of 50s and zeros. And in some cases, what you'll see is a pin will clear out the lower part of the box. Now, if you're doing the math in your head, you know at the end of the hour, that last candle of the hour in most cases is significant because where it closes can give you an idea of where the next hour is heading. And so in your mind, you want to be doing the math. That first hour is a stop hunt down on the hourly candle. The second hour is down low. The first bar of the next hour pops back inside. These are 15-minute charts that I'm talking about. Okay, but it's the hourly phenomena. If you go and look at your hourly charts, you'll see similar patterns, but these 15-minute charts are what's painting them. And in your head, that major pattern that we talked about, hit the stops, rise, or it could be a stop hunt that goes down and then down again. We could see a 50 pip stop hunt, but you'll see that the 10:45 candle, the end of the hour, the beginning of the next hour will often be where the opportunity lies for an indication of getting back into the market. Now, again, just simplifying things, high and low, equity opens, numbers, 12 candles. We've eliminated 4 already, knowing that that's probably a stop hunt. The next 4, if it moved aggressively back in one big candle, that also would be considered to be a stop hunt. If it's inside of this range, all they're doing is hitting both sides until they start to work one side. If they're working the high, we're probably going to be selling it. If they're working the low, we're probably going to be buying it. Now again, just to reiterate, as I said the other day, we are not talking about blindly buying at the low of a breakout. A breakout, we'll go through a breakout example in one of the next few videos. Breakouts do not consolidate. They break out and extend well outside of the range. They may stop hunt back to the range where the breakout occurred at the London Open and then continue in the next candle or the next few candles, and again often correlating with the end of that hour. So if you think there's 4 candles in 1 hour, it takes those 4 candles to make an hourly candle. That's when you start to, in your head, do the math. You can, again, 12 candle rule. What that does is, I know the closer we get to number 12, okay, the closer we are, if I haven't seen the trade, the closer we are to being, and if we're at numbers and we're near the high or the low, I know that we're probably close to where the market is painting some kind of either a W formation on a smaller time frame. It could be on, it could be even be on this time frame, or maybe if we're up top, they could be catching people trying to get the swing long and bring them back down. And these markets will often move. Again, if you do the math, if that's a 25 pip box and they put at least 25 pips into the traders who hold on to a losing position, you're looking at a minimum in most cases on the pound crosses of a 50 pip target. Now sometimes pound Canadian, pound, and pound Swiss, they may only, move 40 pips, 50 from top to bottom before they sort of peter out. But again, it'll usually finish off near numbers. So I hope you got some value out of that. So again, just to reiterate, in that 2 a.m. window, that first hour most likely is a stop hunt if you're inside of the high and the low of the day. That second hour, when London opens up, if we're at an extreme, at the top or the bottom, we're looking for something possibly where they're trapping traders in the wrong direction at the extreme before they shift it back, heading in towards the end of that hour or the beginning of the next hour. And again, there are variables, there's variations on this rule. For example, news. News can sometimes extend that out. There may be a really good move prior to the news, and the news will be used as a catalyst to complete that move. So for example, it may move 25 and the news may shift at another 25. But if you're caught inside of this range between a high and a low during the news, don't be surprised if you see a pin pop up here and a pin pop down there that stops out everybody who's inside of this high and low before, within the next 45 minutes to an hour, all of a sudden resuming its normal trend with normal candle movement. But prior to that, like the BOE, for example, it's very common, the Fed tonight, we have the Fed tonight, very common for them to congest a bunch of volume in here with fake trends and then spike both sides before they roll over and resume their original trend. Okay, again, just to reiterate, high and low of the day, equity opens 3 a.m. New York, 9:30 a.m. New York, Eastern Standard Time. Numbers, mainly zeros and 50s. If you're at a quarter level, they could be building volume up outside of a 50 double zero box. So that's not uncommon to see these highs and lows or even a median price range to be around a quarter. But again, focus your attention at the high and the low. And then the 12 candle rule. Often wait for the stop hunt. What that does, traders have asked me, should I trade, why can't we trade the traps? You can. But what happens when they have trap volume, when they've issued a stop hunt and they work one side and they congest it and they are going to move that, what that does is it effectively allows you to some degree to have a lot of confidence that effectively may be the low or the high of the session in place. And so when you enter into the market calmly, hopefully, at numbers or near numbers as best you can for the best price fill, that effectively allows you to start to look at the idea of scaling those trade sizes up. Up here, down here, when they're swinging, I think those are 50-50 trades. Not all the time. You're selling high and you're buying low, but often, again, I'm trying to really minimize my focus into a certain trade window, and I'm looking for very specific trade setups. And the reason why that is because it's simple and I can duplicate that. And those are the ones that I have found, and you've obviously witnessed that. When they take off, they move, and they're over fast. So I would rather be in something, and you know, often you could get into something up here, and then all of a sudden it stops and might auction in the middle, because maybe you didn't see something over here that was support or resistance, or maybe the market doesn't go. You're caught inside now, or you're caught. And again, the most common places for these orders for stops are above and below. So if you're profitable doing that, then by all means keep doing it, because often that stop hunt, the most important thing is, if you're trading the stop hunt down, to be aware that as we head into that end of that hour, into the next hour, don't be surprised if you're down here and then one candle, bang, you're up 25, 30 pips, maybe 40 pips, and one candle prints. And with the spread, it could be 20, 25 pips. Now all of a sudden you're only up 10, 15 pips, and you're not sure what you should do. You're mad you didn't take profit down here. Should I hold on to it? Should I go to break even? You don't know what to do. And then bang, they hit you again, or they drop it down, and you've got out. You got with 15 pips, and then you watch it fall back down to the low again. So again, when you're down here or you're up here, and you've got that position in the market, and your plan is that they are going to shift it, most of the time you should be looking at a 50 pip target. And if it goes, you know, 40, 45 and hits numbers, or hits a low or a high somewhere else, you know, above or below, don't be afraid to take profits at those levels either, because the market will often turn quickly and come back before it continues its move, or if it builds up, to move the other direction again, to stop out the traders who have been in profit from this session. So hopefully you got some value from today's video, traders. I appreciate the likes and the comments, the positive feedback. Keep the questions coming. I hope you got value from this. Again, use this to your advantage in terms of keeping your trading window tight. If they move this 50 pips, don't sit there for 5 hours looking for another trade. You know, come back in the New York equity session, because again, they're going to start painting a new box probably. And again, we want to focus our energy at the highs and the lows. Again, you'll often be very surprised that at the end of a session, you'll see that the London candle and the New York opening candle will often be a high or a low of the session. So keep that in mind when you're trading. The 12 candle rule applies for the US session as well. So again, if the US session opens at 9:30, I'll use that hour before and the hour after as my 12 candle window. Stay disciplined, traders. Stay focused. Keep getting better. Keep it simple. This helps if you can really simplify things and get clarity, really simple stuff, you can duplicate that, and you can confidently position yourself in the market. You can manage your risk, you can target your profits, and you can walk away from the screen and not sit there for hours. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.